What's going on, everybody? Jeff here. Welcome back to the channel. The market put in a massive week. Even after the slight pullback late yesterday, it still held up very well from Friday over Friday. Now, the big question, can this rally sustain? In this video, we're going to talk about a big overview, and I'm going to talk about some stocks specifically that have had massive moves over a very short period of time. A cool off might be warranted, or are we going to continue to squeeze these shorts? We're going to take a look at some big indicators on what potentially might happen over the next couple weeks, guys. So let's get right into it. First off, yesterday I made a video talking a little bit more about the market, why this non-farm payrolls, huge miss to the upside really didn't pull the market down. It was really because Jerome Powell had already stated, listen, we're already seeing some signs that inflation is cooling, and we know that the effects of the rate hikes really haven't been fully felt as of just yet. Market ripped immediately to the upside before really making a full complete circle, ending off around that 412 level, right about where it opened. But let's take a look at a little bit bigger of a time frame. Okay, you take a look at the last 30 days. For quite some time, as I really wasn't making too many videos, but I talked about this time frame between this 377 to about 388. We were just channeling back in between. Volatility volume was a little bit low, really waiting to see who's going to take control of the reins as we base from its last leg. We broke out of it, back tested, continued to move higher, hit that 400, back tested that same level again around that 387 to 388, and have just ripped 30 points to the upside. Okay, now we hit another crucial level about that 418. This is important to zoom out. You can see here, and I've talked about it multiple times, back in that February, March time frame. Okay, it acted as support, came back here, saw that resistance back in June, obviously had the false breakout to the upside, and here we are once again. Okay, now let's zoom in a little bit further. All right, and this is where things become a little bit tricky. When you take a look at this daily candle, okay, we opened up around that 411, went all the way back up to retest, okay, where we had closed the previous day, and sellers really piled on and shot back down. That weekly that daily candle is a little bit bearish. Okay, when we've seen other bearish candles, on the daily chart, we know that we've had a few days of pullback. However, when you look at this weekly chart, all right, and this is why it's always very important to look at multiple different time frames. You can see this same level at that 408 has been a very pivotal level on the weekly chart. Okay, you can even look at it on smaller time frames and see that 408 has just reacted strong every time we've broken through that. Well, we closed over that level. The bulls were able to hang on. We curled around that 378 on the bottom of that channel I was just talking about, and we closed above that. Is this rally going to be able to sustain more upside? Now, in my personal opinion, I do feel that, and you can clearly see by watching the price action, is bulls have been in control. Okay, even though the volume's low, you can see, we had the breakout in the volume on this weekly chart. The bulls been in control. Sellers have just, and shorts have really just been squeezed slowly out of this market. There are a lot of still shorts that are trapped, are waiting for that 422 level. Let's get that gap fill and then see exactly what happens. Are we going to blast through it, get a false breakout to the upside just to squeeze out shorts? You can also see that this 432 level is another crucial level. It really remains to be seen, but I want to talk a little about some other indicators here, okay? And let's just zoom out first and take a look at some individual stocks, because when you start to look at some of these individual stocks, you can see that some of them are really stretched. Let's talk about Tesla, up almost 100% from where it was just at the start of the year. Okay, when you look and you zoom in a little bit closer, we bounce off that 101 after on about the 6th, the 7th, it went all the way up about 100% on a mega cap. All right, how much longer can it sustain without just getting a nice pullback, consolidate? You take a look at Netflix. Let me find it up here. Netflix has been another one back a little bit further, obviously since June, but even going back towards, the October, it's up over 100%. Same thing since the start of the year, where we are at that 278, up over 100 points. How much longer can it sustain until we get a little bit more of a pullback? The other one is Meta. Okay, same thing with Meta. October 88, up well over 100% and over 100 points to where we were. They did come out massively on earnings, which is good because, like I said, their business model really does need to adapt and re-innovate some some different things, obviously, because the metaverse is a little bit farther out from where they can anticipate, plus just where they see the demand coming from, which was a good sign. Last one was, what was the other one that moved, ripped 100%? I believe, and it wasn't Amazon, but Amazon has had a massive run from that 80 to 116, did pull back after earnings. Another one big on the meta tap. This is what it was, Nvidia. Same thing, guys. Here we are. We bounced off that 100 level, start of the year, that 120 to 140 level. Came through that 140 all the way up to about 220. It's another thing. It's a big company. How much longer can it sustain before it tends to pull back? These are the questions I start to ask myself when you start looking at some of the indices and see, listen, there's a lot more room to run to the upside. All right, we might be a little bit of stretch when it comes to some indicators. We are hitting some resistance levels that we have heavily sold off of recently. You can see that going back all the way up here, right where this line is, guys. We've sold off 1, 2. Obviously, it's the third time we're testing this. The more times you test this, the higher chance we're going to break through this. The indices does show we have more room to run to the upside. But when you look at some of the bigger tickers, they show a little bit, stretch. Now, the earnings for, most of the big companies already passed. We still are jam-packed with other companies, as well as some big ones. You've got Disney, Enphase, PayPal, and some other commodities as well. But for the mega cap, that is already behind us. One thing that I will point out to you is this was written, days before, Chair Powell spoke in the Federal Reserve. Is you look at some of these articles, you just see top two from the last five days ago. Fed to signal hawkish pause. Stock are poised for a pause and pop as Fed eases. This coincides with what I was talking about, this 3-stage pivot, that we're going to get a pop once the Federal Reserve says, listen, we are slowing our interest rates. We're going to get a second pop when they officially are going to pause and hold their rates. And then eventually we're going to get that third pop when they start to bring rates back down. Now, there still are some serious looming threats of a recession. Now, I want to point this out when people talk about, the Fed are going to cut interest rates. Let me tell you this. The Federal Reserve cannot keep interest rates super low for a long period of time. And the reason being for that is, what happens when there's a recession? What are they able to do, in order to force consumers like us to go out and spend? What are they able to do in order to help consumers? Obviously, you can print money, but the biggest thing they need to do is lower interest rates. When interest rates are already at rock bottom, you cannot lower them, So while they might be able to bring them down a little bit from that 5%, they're going to want to hold them as long as they can and try to sustain the economy. Obviously, that when it does start to slip into a more of a known recession, then they'll be able to pull them back a little bit further. Last thing I want to point out is where this money flow is coming from. So this was an article going back to the end of December. All right, big institutional investors are buying while retail investors are dumping. I don't really think retail investors were dumping too much, but there was a lot of institutional investor flow. When you're looking at this time frame going back to the end of December, start of the year, we saw that breakout. January, new year, January effect is what they call it. That lead up into earnings. All right, earnings have been poor for quite some time. That really turns into say, listen, as long as things aren't getting worse, that is good news. That article really coincides with the massive run up that we've had. However, here is another chart, and this is obviously a larger time frame, but you can see where the flow from institutional money is. And this month just closed at the end of January, I'm sorry, this last chart just closed at the end of January. And you can see where smart money is, where that institutional money flow is. Let me zoom a little bit for you guys, where that institutional money flow is. And it is not at rock bottom, but it's pretty close to where we were. And you can see exactly, obviously going back in 2022, we had some of the run that occurred. Same thing, SPX was at 36.40. We had another run all the way back up to 400 at the end of November. Then we had that January. We saw that institutional money flow into January. SPX was at 38.49, clearly where we are over 4,000, over 4,100, right around that time, that price point where we hit. And institutions are starting to back off a little bit. They're playing these pop and drops happening. So like I said, while there is room for argument and to see that the indices can continue to push to the upside, all right, we are still holding that trying to hold that 412 support level. there is more room we can run to the upside, and there is full room for argument getting to that 422 level, squeezing out those last bit of shorts that are still hanging on, that are still piling on. Okay, squeeze them out before we get that last blast off to the upside, and then we get a little bit of consolidation and a pullback. It's important to know that some of these mega caps, these big, stocks that I just showed you in this video, are already up, some of them over 100% in just a very, very short period of time. Going based on his history and statistically, it doesn't tend to last that long before we get some profit taking, get a cool off, consolidate, and continue to move to the upside. So guys, that's it for this video. I'll see you in the next one.